This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody, a very good afternoon. Yes, indeed, we are across Bloomberg platforms right here on Bloomberg Businessweek Daily. We are the final trading day of the month of July. Feels like it was kind of, I don't know, we've been bouncing around. I feel like we were going out with a little bit of a whimper, but we are higher and on all the major indices.
We are, for the month, down ever so slightly on the S&P 500. I mean ever so slightly, down 0.3%. The NASDAQ, though, down about 3.5% on the month. You know what, though?
What?
Zoom out. We're still higher, close to 10% on the year for the S&P 500.
Go inside the S&P, folks. It is an even split, pretty much. 240 names to the upside, 262 to the downside. So that's kind of what's going on. Amazon, though, is your top gainer in the S&P, and I think in the NASDAQ 100 as well. It was earlier. So you can see what's leading the way. This is stuff that we're going to get into certainly later on. I have to say, ahead this hour, Tim, it is kind of all AI in one form or another, and we're actually going to weave it through the next 3 hours on Bloomberg Businessweek Daily. First up, who is Leopold Aschenbrenner? Why is Wall Street watching everything he is doing, too? We know a lot of you already have been reading about it on the Bloomberg. It's among our most read stories, if not the most read. There's been a lot of reporting about it, but we've got to dig into all of this, and there is obviously a big AI connection here. Yeah,
we're going to be talking situational awareness, where the firm, or where the fund, I should say, goes from here. We got Hema Parmar joining us in just a minute. Also AI related, the week that was for 4 of the Mag 7 companies that reported earnings, how we're thinking about that AI CapEx spend today.
Yeah, we're going to get into that. Plus, with another AI angle, the CEO of VEON on keeping Ukraine connected over more than 5 years of war pressures from another hot war in Iran. SpaceX, Starlink, they have some deals there, and how the company is building with and using AI. There's your AI connection. All right, folks, just a reminder to big thanks to all of you who've been sending in questions. We love it. Exclusively for Bloomberg.com subscribers and terminal clients. And Tim, it's really easy to do.
It's easy. All you got to do is go to Bloomberg.com/AskRadio. That's Bloomberg.com/AskRadio. It's available for Bloomberg.com subscribers and terminal subscribers as well.
All right, let's get to the markets on this Friday, as we like to say. Charlie Pellet, take it away.
Hi, thank you very much. And right now we have got the Dow, the S&P, NASDAQ all advancing. We are seeing a rally in the world's biggest tech companies. Case in point, Amazon.com after earnings, surging now by 15%, certainly leading the NASDAQ 100 index higher. However, holding back that index is Apple. Apple after earnings down now by 9.7%. So the S&P up 0.6%, Dow Industrials up 288, that to a gain of roughly 0.6%. NASDAQ up 0.8%, with the NASDAQ 100 index up 0.8%. Not a broad-based rally, though. The Russell 2000 index of small cap shares slumping right now by 0.3%. But the SOX is advancing. The Philadelphia Stock Exchange Semiconductor Index up now by 1.5%. All of this with a VIX below 17 and a 2-year at 4.28%, the 10-year 4.74%, the 30-year 5.27%. Gold, meanwhile, down $49 the ounce to $4,053, down 1.2%. An advance for crude, WTI now at $84.68 a barrel, up 1.3%. Barrel of Brent crude, $90.04. Brent crude up by 1.1%. Bitcoin, meanwhile, down 2.4%, 63,182. 6 out of the 7 Mag 7 names have reported earnings, and right now we have got shares of Amazon advancing by 15%, Apple lower by 9.7%. Tim and Carol, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thanks so much. We'll come back to Charlie throughout the hour for Check on Trading on this Friday. Hey, I don't know if it's a sign perhaps of the AI trade that we've all been pretty worried about, or you certainly have seen it play out in the markets. With leverage going on, the high flyers, the unknowns when it comes to ROI. We got some reads on that and some different reactions in the market when it comes to some of the hyperscalers. It is all about the roller coaster ride, Tim, that is the AI spend and build.
We're talking about Leopold Aschenbrenner's hedge fund, Situational Awareness. It sold a chunk of its AI-related public equities this week, and saw its assets slump sharply from $45 billion to $10 billion. The fund's sharp sell-off in AI-related stocks, it's highlighted the risks, Carol, behind some of the market's biggest AI bets. Ken Griffin's Citadel purchased a significant portion of these holdings.
Feels like you got a deal on that, but we'll kind of dig into this.
Time will tell.
Exactly. Good point. All of this, though, has been asking, who is Leopold Aschenbrenner and why is Wall Street watching? With more, Bloomberg News hedge fund reporter Hema Parmar. This is her world. She's been watching. So good to have you here with us. It is amazing how all of a sudden everybody just wants to find out what's going on here. It is among our most read stories on the Bloomberg. Who is this guy? Why are we talking about it so much?
Yes, talk about a roller coaster the past couple days, even just the past 24 to 36 hours. Why we're talking about it? This, Leopold is 24 years old. He runs a hedge fund that had $45 billion in assets. Even with this huge decline, they still run $10 billion. It still makes it one of the world's biggest hedge funds. But what's gone down in the past few days is them needing to sell off assets in order to meet margin calls. They had this huge exposure to AI investments. They had a ton of leverage. It's a story we've seen time and time again. The risk that we see in the market with these levered up bets, them needing to seek a buyer to get some liquidity to meet the margin calls. They found it in Citadel with Ken Griffin, who bought a chunk of their stock portfolios. Interestingly, they even were considering selling off some of the private assets, these valuable Anthropic stakes. So it shows just how dire things were hours ago.
Who were the investors in this fund?
Yeah, so that's a really good point, because typically hedge funds have big institutions, sovereign wealth, endowments, foundations. This hedge fund, even given its size, didn't really have a lot of those investors. In fact, some of those investors opted to not invest in the fund because they looked at it and was like, oh, I don't know about those risk management skills. It doesn't seem super professional. So the investors that we're seeing are founders, they're tech, more Silicon Valley individuals, they're wealthy, high net worth, but it's not the typical sort of LP we see in the hedge funds that we write about very often.
Ken Griffin coming in, right? And there are other people who kind of passed, right? Who maybe looked or briefly looked.
They had conversations with Millennium, with Jane Street. Citadel is the one that got the deal at a discount. This is what Ken does. He jumps in when you see firms in distress, gets a good deal. We've seen him do this many times in the past, either buying up assets at a distressed firm or taking talent. So this is part of his playbook. It's what he does.
Who is this 24-year-old? I don't know what you guys were doing at 24. I think I was getting my first broadcast job. But I'm just like, who is he?
You didn't have
Great
a
question.
hedge fund worth $45 billion, Carol?
No,
Okay.
I didn't go to college at 15. I didn't.
You were in valedictorian at 19?
I was not,
Okay.
and I didn't work for some really well-known people in firms that are
Yes.
out there and very much a part of, I feel like, our world.
Yeah, going to college at 15. He founded Columbia's Effective Altruism group, which is this like philanthropic avenue. He helped run Sam Bankman-Fried's philanthropic arm of FTX. He worked at OpenAI for a couple years, then got fired. His claim to fame is the manifesto, Situational Awareness, which really put him on the map. People began following his 13 Fs. He had sort of like a cult following about his key points around AI and the risks and the rewards. A very large manifesto. He named his hedge fund Situational Awareness after this paper that he put together, and he's been closely watched. Raised a ton of assets, has lived all of the...
Who's closely
Yes.
watching him? This is the thing who are the investors who are closely? Is it retail? Is it really institutional? Is it folks in Silicon Valley? Like, who is it?
Less institutional, more individual founders, more Silicon Valley type of people.
The same who are investing in him.
And maybe the ones that are investing in companies like Anthropic or like that are employees of these firms,
What were some of the public equities he bet on?
Yeah. So he bet on companies like SK Hynix, Bloom, SanDisk, a lot of AI bets, highly concentrated, highly levered. That's not a good mix.
How different is this from a typical... I mean, this is your world, Hema.
Yeah.
You cover hedge funds. How difficult was his typical or different was his strategy from the typical hedge fund?
Yeah, no, that's fair. So he did take short bets, which does make him a hedge fund. He does publics and privates, which we see a lot of hedge funds do. On the flip side, a lot of leverage on a concentrated amount of AI stocks. A lot of the hedge funds that we think about as public privates, we don't think that they use that much leverage on these positions. That's a bit of an outlier. If we look at Viking Global in the past couple months, like they've been very vocal about not making big AI bets. Now that's been a bit of an outlier. A lot of hedge funds are riding this beta wave. They're posting strong returns over the past year or so because a lot of them are concentrated. But it's the leverage factor. It's the fact that 4 to 5 times on highly concentrated bets. We like to not see that in our space.
It works when stocks go up.
When it's fine, but
well, Carol, that's a good segue for you to talk about the banks. You came by my desk this morning. You're like, come on, we got to talk about the banks.
Well-known banks on Wall Street,
Yes.
JP Morgan among them, who were willing to lend him capital to do this.
Exactly. And he was trying to have more conversations to get more financing in recent months.
Just to wrap up here, is there a problem? Is there a takeaway? He's still got a $10 billion hedge fund.
Still got a $10 billion.
So is there something that we should take away? Because we keep looking for canaries in the coal mine when it comes to the AI spend and trade.
Yeah.
Is there anything here, or what are you watching for what's next here?
Yes.
What should we be watching?
We're going to be watching to see which other hedge funds are seeing pain as we get through the end of this month. We have a rally, today, so we will see maybe some better performance at the end of the month, but also it's been incredibly volatile. So we're going to be watching the numbers that are coming out next week to see who made money, who lost money. We're going to be looking at Citadel. Their numbers have been somewhat middling over the past 6 months. So what kind of a dent or improvement will this deal have on their returns? It should lift the returns. It should be a sweet deal for them and for their investors.
It's just fascinating. Like we said, he's still doing okay, but it's interesting, and certainly not where he was a few months ago. No. Hema, thank you so much. Hema Parmar, she's going to be back in our 3 p.m. hour. We want to continue to stay on this story. She's Bloomberg News hedge fund reporter. We're going to stay on AI.
We are. It's being told through Mag 7 earnings, at least this week, when 4 of the big companies reported. Amazon shares surging after the company reported cloud computing revenue accelerated for a 5th straight quarter. It eased investors' concern that it won't produce a return on huge expenditures to meet the booming demand for AI. And then, Carol, there's Apple.
Tumbling after component shortages weighed on the company's sales forecast, signaling that industry-wide supply constraints are taking a bigger toll than anticipated. He's been one of the voices guiding us through all of these earnings this week and really last. Ed Ludlow, host of Bloomberg Tech in the Bloomberg San Francisco bureau. Ed, Amazon and Microsoft were cheered, Apple and Alphabet, not so much. Is there a clear AI narrative, or is it all company-specific?
There was a note that hit my inbox from Azuo this morning that had an image at the top of it that said, it was a red hat that people will be familiar with something else, but it said, "Make fundamentals great again." And it was trying to kind of apply that. I think we should probably strip out Apple from the hyperscalers, right? Because it's muddled, fair. But why is it that Alphabet was punished and the other 2 really cheered? It's hard to answer that, because one of the things that the street liked about Microsoft was there was stuff beyond the top line growth. So they gave data around Copilot and how well that's doing. Amazon gave us the extra figures of revenue run rate for the AI business and revenue run rate for the chips business. But Alphabet also gave us stuff like that. They told us about Gemini and tokens per minute. And for one reason or another, it just wasn't enough. But in general, all 3 of them showed increased commitment to spending. Microsoft said it will protect free cash flow. And they all showed massive cloud growth. And that's the summary, if you just take away whatever the market reaction was in any case.
So, the market reaction for each of these on their own notwithstanding, but the narrative, Ed, hasn't changed at all since before Alphabet reported last week?
Not really. I mean, there's a lot of specifics that are worth discussion. Amazon raised CapEx by $20 billion for this year, in large part because the cost of building infrastructure is going up, right? So it's gone from $200 billion to $220 billion. But what Andy Jassy said was that's largely because of higher memory prices. It's not necessarily raising CapEx because they feel like that would make them move faster on the infrastructure. But the cloud growth is there. AWS growth of 37% was pretty handsomely above street expectations. Azure's growth of 43% was near to being in line, but it was like really cheered for one reason or another. Nothing's changed. Spending go up, cloud growth go up.
To put it simply.
I love that. Qualcomm, I don't know. Should we bring? Is there anybody else we
could
need
bring
to-
in Rivian. I do want to talk to Rivian.
okay,
but
let's
even though
go.
it's not one of the mag, because
No,
Ed had a great
that's fine.
conversation with the company's CFO.
He did, yeah.
Ed, we'll talk more of the Mag 7, but I want to talk to you about Rivian because this is a company you followed since literally before it went public. You understand this industry better than pretty much anybody else. But the fact of the matter is Rivian's facing the same problems that Ford is facing, that General Motors is facing, that Tesla is facing, and that's, well, what is the appetite for EVs in this country?
Yeah, I mean, the EV market generally has slowed over a number of years in America. Enthusiasm is gone, even with the short term of the war in Iran and what that's done for gas prices. It's not really changed trajectory. Rivian opened higher, 2%, and it's now down more than 7% in the session, but they had a good quarter where basically they've been losing money for a long time. Those losses have narrowed, and they launched their mass market product in a really small way at first, the R2, but they now like have something to show for it in the real world. So, the conversation I had with Claire McDonough, the CFO, was very much like, okay, this is it now. You're to your mind, you're in the bigger leagues. When are you going to start seeing some financial returns on that? And the back half of this year is the answer.
Right? Every kind of growth company or new company has to grow up at some point, become a teenager and an adult, essentially. Hey, I want to, sorry, well, it's true. It's the reality, right? I do want to go back to Apple.
Yeah.
We talked about Apple kind of looking smart regarding cash flow and CapEx spend, and yet we have seen the stock under pressure.
Yeah, I mean, gosh. You also mentioned Qualcomm in passing a second ago, so there's something common there. But this is like a really profound reaction in the stock from Apple.
Yeah.
It's down 9.5%, but put a better way, it's the biggest drop since the world shut down for COVID in 2020, March 16th, 2020. And the story, put the numbers aside, was that Tim Cook, in his final ever call as CEO of Apple, made an admission that they'd got it wrong in the supply chain. So it's not just that memory chip prices are higher. They said those will continue to be higher into the September quarter. It's that they basically said they misjudged demand and they placed the wrong volume of orders for lead edge processors with their suppliers. And so in the end, the demand is there for iPhones. They couldn't build enough of them because they got the math wrong on supply of components.
Yeah, just 10
It's what
seconds.
they do
Will demand still be there when they raise prices at the next round?
Well, Anurag made this point with us, right? That he felt the iPhone cycle for the 17 generation had one good quarter left in it. When you get to September and then suddenly you're in the release of the iPhone 18, that's where the higher memory pricing issue will show up. So I don't know, really. I can't really answer that. The guide was that revenue growth in the September quarter will be 9% to 11%, and the street was looking for 12%, which was already taking into account a very tough environment. And so Apple's projection came in below that. There was no sentimentality for the fact that it was Tim Cook's final call. That's not what the market trades on.
Well, as the guy who oversaw supply chain, right, that's a rough way to go out.
He's still there. He's not out.
He's not out, but you know what I mean. Ed Ludlow, thank you so much. Really
Thank you,
appreciate
guys.
it. Yep, host of Bloomberg Tech out there on the West Coast. We're going to the C-suite when we come back. We want to get to a company that recently, actually this morning, reported earnings. We're talking about VEON. And we did see the stock rally at their intraday high today. This is after coming out with financial quarterly results. Company raised its fiscal year revenue growth outlook and its fiscal year EBITDA growth. And the company, it's kind of a story about Ukraine. It's about telecom. It's about wireless. It's also about becoming a super app, Tim, and more.
Kaan Terzioglu is with us, CEO of the publicly traded and Dubai-based VEON Limited, $3.6 billion market cap wireless telecom company. It's the parent company and majority shareholder of the Ukraine telecom company Kyivstar. Kaan joins us from New York. Kaan, first, just clarify the relationship between VEON and Kyivstar, because I understand the majority shareholder part, but since Kyivstar is a separate publicly traded company, how is VEON still considered the parent company?
Well, we decided to actually take Kyivstar to NASDAQ a year ago, and we are just celebrating its first year anniversary of being listed in NASDAQ. Actually, last Monday, we rang the bell, closing bell in NASDAQ for Kyivstar. And we just listed 18% of Kyivstar. We still own 82%. We are very proud to be basically serving Ukrainian people in Ukraine. And it is a stellar company. I think you should also have Sasha one day here to tell about his story and his growth.
We've spoken to Sasha in the past.
Yeah, we have.
Oh, you have? Great. I think, if you have noticed, we are in Ukraine, we are in Pakistan, we are in Bangladesh, Uzbekistan, Kazakhstan. Practically, the countries that we serve is 600 million people. These countries have one common characteristics. They are underserved. And that's why, we do not define ourselves as a telecommunications company. Telecommunications is not the destination for us. It's a foundation. We are a digital operator. We do not sell number of gigabytes, number of SMSs, number of minutes. We would like to provide meaningful digital services to our customers in financial services, entertainment, healthcare, education, enterprise services.
So
I'm so happy.
So this is about infrastructure, right? More broadly, because my understanding is you guys also think of yourself as kind of an investment vehicle for investors who want exposure to the reconstruction in Ukraine, for example.
Absolutely true. I mean, I think, VEON and Kiev as two stocks, they are a unique opportunity for American investors to participate in the growth story of these markets. But it's not only about the infrastructure and, building roads or fiber optic cables or data centers, but it's also about the digital reconstruction of industries like healthcare, education, transportation, logistics, e-commerce. And those areas are where we are investing heavily. For example, you would not expect Kyivstar to have a ride-hailing business or a marketplace or a healthcare service provider. But most of our growth today comes from these businesses. If you look to our Q2 results, 17% growth, 27% of our business is actually coming from digital services that I mentioned, and it's growing 53%. And that really makes me excited because our strategy is working. Actually, in these markets, if you can reach out to customers, provide a low-cost distribution platform, you have a unique advantage.
So, again, and my understanding, because we're trying to understand, because you guys are in a lot of stuff. I think this came from a Reuters story that I was reading in preparation for this. You guys are expanding in areas such as entertainment, financial services, super apps, which combine multiple digital services on a single platform like China's WeChat. Is that what you're trying to become?
Well, on top of our telecommunications foundation, we have three businesses. One is financial services. The second one is digital life, which actually includes from marketplaces to healthcare solutions to ride-hailing businesses. Anything that touches the daily life of a customer is in that category. And the third one is digital enterprise, which is cloud and data center services for our enterprise customers. And those three businesses, together with the telecoms, is defining our total business.
Kaan, on the infrastructure side, particularly in Ukraine, and we all understand, some more so than others, about the challenges that the country faces being in its more than 5 years of war. But from an infrastructure perspective, when it costs so much to actually build this stuff out, and then in some cases, sadly, it is destroyed in a war, how do you do that when it costs so much money and when you don't know if it's going to survive as a result of the bombing or whatever's happening in that particular theater at that moment?
So, Tim, it's been 5 years, and we have 4,000, heroes working in Ukraine for Kyivstar, and we have kept 95% of our network up and running. And during this time, we had numerous challenges, from cyber attacks to energy outages to direct hits. And unfortunately, we lost 5 people during this process. But we never lost our path in terms of keeping Ukrainians safe and connected. And we have even gone the extra mile because we have integrated our terrestrial networks with satellite platforms of Starlink. Today, 5 out of 10 customers of Starlink Mobile is our customers in our countries. Actually, we have enabled direct-to-cell capabilities so that our customers in Ukraine can connect and communicate, even if there is no energy in an area, even if the area is landmined so that it cannot be serviced properly, we have the ability to serve our customers. I think that's really the concept of how to make sure that the customers are connected. And on top of that connection, how customers can really consume meaningful digital services.
You know, one of the things that we also like talking with your team at Kyivstar, but getting an idea of what it is like in terms of life. You mentioned some of this in Ukraine as this war with Russia is now in its 5th year. What is life like? Is there reconstruction going on, or can there not really be until this war is put to an end? I'm not quite sure. It's, you know, there was a point in our life that we talked about it a lot more. Obviously, the U.S. war in Iran has shifted some of our conversations dramatically, but this war continues.
First of all, you know, it's needless to say, war is a terrible thing and it changes lives, livelihoods of people. But in Ukraine, the morale of the people and the livelihood of people has never been, I think, lost. Frankly speaking, the reconstruction is a perpetual work. They are resilient and they continuously, every single day, ready to build what is destroyed. And I can say you this, I have a flash forward. And in that flash forward, what I see, Ukraine is winning. And the people who will be investing in Ukraine now will be even winning bigger. Because reconstruction of Ukraine, I have no doubt that in 15 years, it's going to create the most prosperous nation in Europe.
We follow a lot of what's happening with SpaceX and what SpaceX is doing with Starlink. And there was a report out of Semaphore earlier this week about SpaceX being interested in buying spectrum and starting to compete, at least in some parts of the world, with the telecom providers like T-Mobile in the US, Verizon in the US, AT&T, and shares of those companies fell as a result of this news. Do you guys use any Starlink or SpaceX technology right now to supplement what you offer in different markets?
Absolutely. We are the biggest partner of Starlink in the countries that we operate in. As I mentioned you, globally, Starlink, I think, announced that they have 10 million customers on direct-to-cell technologies. 6 million of those customers are our customers in Ukraine, in Kazakhstan, in Bangladesh. And I do not see Starlink as a substitution. We are their partner, and we work very closely together, and we are proud to bring integration capabilities of terrestrial networks and satellite platforms in the countries that we are operating in. Now,
so you're not worried. You're not worried about competition eventually from Starlink or SpaceX?
In my countries, absolutely not. We are the licensed operators in these countries. There are reasons why we are licensed. We hold spectrum ourselves. I do not see any intents of Starlink to come and do the groundwork of this type of business. To be frank, if you look to our financials, while we are extremely profitable and cash generative company, we know how to operate in low cost, low price markets. And I think, you know, these markets are unique, and we are the main players in these markets, which will be partnering with Starlink to make sure that people are connected at all times.
You are based in Dubai. That's your official headquarters. How has the U.S. war with Iran impacted you guys?
What I can tell you that Emirates is such an amazing place. You know, they actually took care of their people, their visitors, the expatriates, the companies there, completely informed and protected in an incredible way. So hats off to them. Of course, it's not easy to be in a hot zone like that, but I remember none of my flights got delayed, canceled, and there was no impact, negative impact to our business or to our life during even those difficult times.
We appreciate you weighing in. Kaan, we've only got 30 seconds here. You guys just opened up some offices here in New York City, Rockefeller Center, very well known to anybody in and around the New York Metro. Just quickly, 30, 40 seconds, why and why now?
Well, the office we opened is actually a connection point for us to communicate to American investors that there is a market, and the only way to invest in that market is, well-governed companies like Kyivstar and VEON. And if they want to participate in the growth in Ukraine or in frontier markets, we are looking forward to talking to them. And that office will be the heart of that transactions and discussions.
All right, great to check in with you. Look forward to future conversations. Kaan Terzioglu, he is CEO of the publicly traded VEON Limited, joining us right here in New York City. All right, when we come back, we've been following this here at Bloomberg. FIFA. World Cup is over, but they're digging in big time on
now
privatization.
The drama is starting.
It does
The
feel
World
like
Cup is over, but now's the real drama.
the drama off the field, right?
Yeah, UEFA versus FIFA.
All right, we're getting into that when we come back. This is Bloomberg. Well, a most read story on the Bloomberg: FIFA digging in big time and will proceed with plans to privatize its commercial business despite spreading threats from regional footballing organizations in Europe, Asia, and North America that they could boycott the World Cup. They're digging in.
All right, they're digging in. We're going to dig into it too with
Yes.
Vanessa Perdomo-Maglione and Bloomberg Businessweek, Business of Sports, Bloomberg News senior reporter Randall Williams with us. Vanessa is the co-host of the Business of Sports podcast and a Bloomberg News sports business reporter. They both join us here in the studio. So they're moving forward with this despite all of the outcry from leagues around the world, Vanessa?
They are going to move forward with it. They're going to have a vote, with their 211 members in September to see if they decide to take this $20 million check that would come their way if they do end up going through with this plan. But right now, they're going through, Gianni Infantino's going through with the next few steps as he can.
The motion of going through.
Okay.
It's not done. Them saying we're going to charge forward does not mean that they're going to break through the door.
What will keep them from breaking through the door?
Well, UEFA represents a good portion of the European countries. Of course, you have CONCACAF that represents some as well. And so they combined are above 90 countries. You have 90 countries that say no, and very quickly it gets a tight race.
Yeah.
Couldn't we see like a schism here? Where, let's say FIFA does decide to do this, then there is some sort of boycott of the World Cup. The UEFA teams get together with other leagues around the
What
world.
is
and
FIFA without them?
Exactly.
Nothing.
Vanessa.
They're not. FIFA is nothing without UEFA. UEFA is by far the most important part of FIFA, a most important part of global soccer that there is. So if all of those teams come together and say, we will not partake in the World Cup, then you will have asterisks on the next World Cups because the real winner won't be there.
So let's think about it in terms of the rounds of the World Cup. You had Portugal, you had Croatia, you had Spain, you had France, you had England, you had Germany, who, they got out very, very early.
Belgium, who beat
Belgium
us.
as well, who beat us. So you get all of these bigger countries who are well established out of the World Cup. And what does this look like? We also have, I don't believe we've heard from South America. And if we have,
South America hasn't weighed in yet.
But if South America weighs in and says we're out on this, then it's dead. Mm-hmm. Brazil not playing, Argentina not playing, those are titans. Now all of the world titans are out, and we're not going to be watching a World Cup with whatever small countries that would participate. It's just not going to be popular.
So who has the power here? Is it the regional? Is it FIFA? Tell me, understand, for those who don't know, me included, explain the structure of how this works and who makes decisions, who determines the partnerships, the sponsorships, the money part of it. Help me understand this.
I mean, the real power is technically with the teams. If you want to look at it in terms of maybe American sports that people could understand, it's that NBA is the entity, but the players are the face and they have the power, which they've been, exercising a lot in the last few years, right? You have no league without us, so we can go here, and we can go there, and we can do whatever we want and jump teams. So if the big power teams in FIFA say, we don't want to play, then they're going to have to really pivot. I don't imagine a world where they're going to go forward without UEFA. I don't imagine.
So does that mean FIFA doesn't do this?
I don't. I find it hard to believe that this will go through. Now, but going back to your question, UEFA controls the Champions League. They have the Euro Cup, which are two tournaments that are based in Europe. Then you have the Copa America, which is controlled by the South American, I believe CONCACAF as well, that participates. And then you have the World Cup. That is FIFA's main event. Now they've tried to do the World Cup, the Club World Cup, which of course is with clubs. Think of Inter Milan and FC Barcelona, those clubs. But those aren't big money-making events the same way that the men's and women's World Cup are. And so what they're trying to do now is like, listen, we'd like to make more than just our big event every 4 years.
Which, by the way, is one of the other reasons why UEFA is probably against this entire deal, because it does encompass the Club World Cup, which involves their teams, and it then directly competes with what Randall was saying when they're competing against the UEFA Champions League.
Any of the big players weighed in on this, or is it just the leagues?
I mean, I would say that in some aspect, with UEFA saying no, that is the players. If someone was going to say yes, like the players aren't going to be getting this $20 million, and you're talking about countries that probably generate this very easily. England, France, Spain, Belgium, all of these countries are competitors with this. This $20 million is not going to go that far for them. But you think about Cape Verde, that could go far for them. But is it going to make them a contender tomorrow? Remember, this $20 million is not every single year. It would be stretched over 4 years. And then let's get to the distribution of things. Do you trust every single football federation's head official to then distribute that to youth places?
Randall, of course we do. So FIFA had to know putting this out there was going to cause this kind of turmoil and debate, not even debate or pushback. So why did they do it?
I mean, it remains to be seen. We did have a report today, and one of the FIFA executives come out and said that this is solely a Gianni Infantino plan, said that this was also kind of a surprise for the rest of their organization.
So ego?
What I would say is you have to, in order to understand what's happening here, I would say go back to December and really even farther than that if you want to. Like, look at the way that Gianni Infantino has cozied up with President Trump. A peace prize. We go to war. We seize the Venezuelan president 30 days later. 60 days after that, we're with war in Iran. And then, of course, you have the Flo Balogun controversy. And now you have these deals. All of this was in the works very, very early on. And so in his mind, he's like, I've generated $15 billion. This was the most successful World Cup of all time. And by the way, we're all going to get so much more money, but he's upset a lot of people with this. It isn't just President Trump cozying up. You have the hydration breaks as well that UEFA has said, we're not going to be doing that in our events.
Oops. We made a mistake. Hey, we don't want to wrap up without your interview that you did with Mark Klaus of the Washington Commanders, the president. Tell us about that interview.
So Mark Klaus, he took the job at the end of 2024.
This is the real football.
The American football.
I'm going to get
Johnny is not going to like that comment. But the Commanders, with Josh Harris taking over, have quickly become one of the more popular teams of the NFL again. They had an unsuccessful season last year, but they have a new stadium. They have the NFL draft coming to Washington, D.C. next year. And so Mark, of course, is tasked with leading the stadium efforts, bringing the draft there, and then maybe someday there will be a Super Bowl in Washington, D.C. So we talked about all of that on Wednesday, and it was great.
All right. We apologize. We're running out of time. We can't really run the clip. Is it all in your weekend podcast, Business of Sports? You guys post it.
It is on the Business of Sports podcast feed, and go check it out for sure.
And you can find it on YouTube. If you search Mark Klaus Bloomberg, I'm sure it'll pop up.
Anything else on the podcast?
We also have the Racing Bulls Formula One team CEO on the podcast this week, and we know Bloomberg loves the F1, so.
Yeah, you put an F1 story, it becomes like one of the most
It's a big one.
You guys have the coolest job. Thank you so much.
Thank you for having us.
And look forward to it. Be sure to check out the Business of Sports podcast. You can find it on the Bloomberg at Bloomberg.com or wherever you get your podcast feeds.
A big thank you to Vanessa Perdomo-Maglione, Bloomberg News sports business reporter, co-host of the Business of Sports podcast.
Look at how colorful they are. What's with us? We're like in these dark, dismal colors, and look at them. They're like
just like people who work in sports.
A ray of sunshine.
And that was Randall Williams, Bloomberg News senior reporter, also co-host of the Business of Sports podcast. Thanks, guys. Happy weekend.
Yeah, happy weekend, guys. Hey, when we come back, a check on trading. Also, some stocks on the move on this Friday. I'm Carol Messer, along with Tim Stanovic. You're listening and watching Bloomberg Businessweek Daily. We're back in a moment.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up the trading day, the trading week, the trading month, if you will, here on Bloomberg Businessweek Daily. Just got a little bit more than 60 minutes to go to wrap up, as we said. S&P 500 hovering near its best levels of the session. That means up about 2/3%, or up almost 49 points. Dow Jones Industrial Average, 315 points to the upside. That, too, is up about 0.6%. NASDAQ 100 outperforming on a percentage basis, up 0.8%, up 221 points. It is off its best levels of the day. We've talked about kind of an even split when it comes to winners and losers in the S&P 500, almost an exact even split there.
Not an even split when it comes to the stocks. The stocks up about 1.3%, 25 stocks of the 30 and the stocks higher. 5 are lower. Monolithic Power, Coherent, and Astera Labs lead the way in terms of the green. NXP Semiconductors down 5%, Micron down 4%, and Qualcomm, just after reporting earnings this week, down 1.6%.
Looking at the Mag 7 as a whole, that group is up about 2.5%. There are obviously 7 names in that index. 6 are higher, 1 is lower. Do you care to guess?
Which one's lower? Yeah, I know which one's lower. It's Apple. If you don't know that Apple's lower today, you haven't been paying attention.
That's so true. Amazon, though, leading the way in a big way. Alphabet too. Microsoft. I mean, it's just interesting to see the trade as we get ready to wrap up the week. So we'll keep an eye on it, see if anything changes in the last hour.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. We've got Bloomberg News Markets Live strategist Tatiana Dare with today's stock movers. Let's start with the big one.
Well, yeah, the biggest one. Apple shares down 10% today. It would mark the biggest move since March 2020 on a closing basis. It is down $500 billion in market cap today, and this is on very high volumes, more than 100%. Its 3-month average. Investors are really punishing the company here for a lackluster revenue guidance, forecast to rise 9 to 11% in the fourth fiscal quarter. Analysts were expecting 12%, so a notable divergence there. And importantly, this will be the debut quarter for the next iPhones. There's a lot of jitters about the price points. Will they have to raise prices for that? You can see those when you look at the gross margin estimates on the terminal. You can see that data has been going up and up and up, and now starting next quarter, it is going down. That tells you investors are really, really concerned about there. But Apple's saying this is not a demand issue. It is actually a supply issue because we can't get our hands on those processors, on those memory chips. Nonetheless, investors not really rewarding that part.
The bad news is I have to upgrade my iPhone 13.
You do?
Oh yeah. I do. I was trying to show Scarlett a text message yesterday. I couldn't even open the phone.
Seriously?
Yeah, but I want to wait until the new one comes out because
Yeah, right. At this
why
point,
buy an iPhone
At this point, you might just wait, right? Because it's not much longer. You know what's wild? I'm looking at the DES page on Apple, and yesterday before earnings, we were touting how much the stock was up this year and really outperforming. It was up more than 20%, and now you're looking at a stock still up for the year, up about 11%. But man, it's just amazing. 24 hours or even less, the change.
Well, that's part of the story, though. I think
you're right.
What is the performance that Apple has seen this year in its shares, and going into yesterday's print, and it was the best performing of the Mag 7 year to date. And
the other thing is, these guys are great on their supply chain. Yeah. That's historically kind of their bread and
Tim Cook does.
And a cash cow, let's not forget, $32 billion in free cash flow. That is more than all the hyperscalers combined, with the footprint that 2 of them reported negative cash flows. So you're really only talking about Microsoft there.
Should we talk about Amazon? The other one actually having a very bullish day.
Well, you mentioned the Magnificent 7 ranking. Actually, if you look at it year to date, now Amazon has claimed that top spot, up about 17% year to date with today's move. Of course, they are up 15% just today in its largest rally since April 2012 on a closing basis. So what Apple is losing in market cap, Amazon has almost added
market
to
giveth, the market taketh away, as we like to say.
Exactly. Revenue here jumped nearly 40%, more than 40 billion at AWS, which generates a fifth of the company's revenue, but right now is the biggest source of profit growth, and this would mark the fastest pace of growth since late 2021. And also the cloud posted accelerating growth here for a fifth straight quarter, so investors are really rewarding that, which helps ease concerns that this big CapEx plans, which they've also boosted for the new year, are paying off. But curiously, they didn't do that for Alphabet, right? Alphabet posted 80% growth for that segment, for the cloud segment. Amazon's growth was lower, and Amazon's negative cash flow was steeper. So to me, this is a conundrum.
All right, let's go to Novo Nordisk.
Outside of the tech space, Novo Nordisk here, another big mover, down 10%, the most since February, after its experimental drug failed to reduce the risk of heart attacks. In a large study, the shot reduced the protein that it was targeting, but did not translate into clinical significance. And this is a real blow for this company, as it's trying to diversify away from obesity and the diabetes space, where it's been the pioneer. So it really has been looking to diversify. If you look at its stock and zoom out, it's clear why they need to do that. So shares under pressure.
Trying to build out that pipeline. All right, Tatiana, thank you so much. Tatiana Darie, she is Bloomberg News Markets Live strategist. Check out our Stock Movers podcast, 5-minute episodes, pick winners and losers. Find it on Apple, Spotify, or anywhere you get your podcast.
We got a great program coming up on Bloomberg Businessweek Daily. The latest with situational awareness next.